Let's review our trades for today. Today is Friday, August 4th of 2023. And we did quite a few trades today. Here you see, we'll go over our small account first, here our retirement account. So first of all, you see the covered call position we did in Realty Income. We sold the $30 September, $60 September 15th covered call option, and it cost us $58.79 per share. So here we see the charts of Realty Income. We'll just kind of focus on these bottom two charts here. Notice that on this daily chart, right here around this $60 area, really right below it, around this 59 or so area, that's served as support for Realty Income multiple times over the past several months. And if we go back here, go all the way back, actually probably a little easier to see it over here on this weekly chart. Notice that we go back here to, let's see, this is back in 2020, throughout a lot of 2020, 2021. This area right in here, right around where the stock's trading now, between 57.5 and 64, served as a nice range bound area for Realty Income. Found support. The lower part of that was around 57, 58, and then of course found resistance when it got up around 65. So we're kind of seeing the same thing now. We're seeing Realty Income kind of stuck in a little range here. It's been here for quite a while. We'll see, going all the way back to March, kind of been stuck in that same area between 64 and 57. So if it trades in there and bounces around, we're totally happy with that. Remember, it's the monthly paying dividend stock, so we'll also be able to pocket the monthly dividend if it's not called away from us before the end of August when it goes ex-dividend. The next one is just one that got assigned on us. We knew this was a possibility, or we knew it was a very likely to happen because there wasn't much extrinsic value in this option. I tried to roll this up to 32 yesterday, but it didn't happen for any kind of decent credit or anything I wanted to do. So I figured I'll just wait and see what happens with LAZ. Take a look at the chart here. Notice it had been coming down, and actually today we're about 45 minutes to the market closes. I want to get this video done for you because I have an appointment right after the market closes. I didn't want to get this video out to you late tonight, so I wanted to go ahead and do it a little earlier. But notice there's a gap here, and so the LAZ is trying to fill this gap. If it does fill the gap, it'll need to come down to, let's see, I'll put it at 32.85. So still is a little ways to go. It is hitting up against the 50 moving average. And we do see that volume is declining as LAZ has been declining. So selling pressure is diminishing. So will that continue and then reverse to an uptrend? Well, quite possibly. And we'll look to go back into the position here in LAZ in the coming week if at all possible. All right, now moving on to our main ops trading account. Here you see the same LAZ position, the cover call got caught away from us. So company I like in good and bad times, and we'll continue to trade in that. So here you see actually I entered as two separate orders here. The SWK, we did a bullish put credit spread by selling the September 15th 95 put, and then we bought in a separate order the September 15th 75 put. I was thinking about it. I was about to cancel that $95 order, and it got filled. So I immediately went in and just bought that protected put option. So it got some nice premium, about, let's see, $2.36 per share. So let's take a look at the chart here of Stanley, Black & Decker. Notice in the top right chart on the hourly chart that this red 200 moving average has been serving as nice support for quite a while, going all the way back to, when is this? Back in early June. So that's looking good, nice and bullish. We do see some red volume bars here as it came down, but again, finding support above this 200 moving average. Now going here to the bottom left chart, the daily chart, this is the one that we're really interested in. Notice this area right here around the $95 put option we sold is the area that served as support for, let's say, 1, 2, 3, 4, 5, 6, 7 times over the past month or so. So an area that buyers seem to be coming in and buying, and we see nice buying volume over the past couple of weeks. And as the stock has been declining the past few days, including today, remember we still have about 45 minutes left until the market closes, volume is quite a bit lower. So not sure how the day will end up, but we don't have much time left in the market. Now notice this week though, it was high volume because of these high volume green bars. We see that Stanley had made a higher high. So it's just in a nice uptrend. Now I do expect it to come down and test this support again. So this cash carry put option will probably get challenged before it's all said and done. And of course, anything can happen. It could break below it. But it is an area that served as support for it multiple times. And looking here at our weekly chart, we see that the green 50 moving average is just below that. It's right about 93.5, 94. So an area that I like to go bullish on Stanley, and we will add to this position if the return stays sufficient, and it does appear to be continuing to find support. Next shows another bullish put credit spread we did in CB. We sold the CB September 15th 195 put and bought the 170 put, and we got $2.10 per share for that. This is a company I don't trade in very often, but I have been watching it, looking for an opportune time to sell some options. So we sold this 195 put. Notice that CB, it made a nice advance, broke through the green 50 and red 200 moving average on this daily chart. Notice over the past several weeks, been nice buying pressure, a few higher volume down days, but overall, buyers appear to be having the upper hand right now. Now, it did have a gap here, so the question is how far down will it come to fill that gap? We sold this one, the 195 put we sold is right at the bottom of that gap. So it could come all the way down. It could still come down another, it's like about 2.5–3% before our 195 put options challenge. So I have to push through this red 200 moving average. Notice it already it kind of filled the gap here. So our gap has probably gone away. It is a weird gap the way it made it. It was a big down day and then jumped way up the next day. So kind of depends on how you look at it. Did it gap up from here or from here? Well, it depends on how you want to look at it. But either way, I like our spot here. Even if it were to come down to retest this support right here, which should be pretty decent support. As you see, it was also resistance. And then it turned into support once it broke out. So this 195 area, I really like the area for support. Just keep in mind, anything can happen. Now, looking over here at our weekly chart, see it's broken out above the green 50 moving average, and that 50 moving average is right at 200. So have some nice support above our 195 put option. All right, next trade is in BAC. So we are in a covered call and a cash secure put option in Bank of America, and we simply just rolled both the strike prices from 30 to 31 as we rolled them out 1 month to September. Didn't pocket much. It's a weird order because the puts and calls are not equal. So what we got is we got $45 minus the $14 commission. So we didn't pocket much on it. But remember, this is a position that went against us when the banks really got hammered. And so now we're repairing it and we're working our way back up. So now this $30 is now up here at around 31. And so if Bank of America continues to hold around 31, then we'll gain that room on our covered call. Notice that it is trading above the 200 moving average on the hourly chart. It also broke out solidly above the green 50 moving average. It appears to have come down to test support, although it wasn't close to that moving average. It wasn't far away from it either. So it does look nice and bullish. You'll see it's made a higher high. It's made a higher low here. It appears to have just made another higher low there. Volume looks good down here in the hourly chart. In the daily chart. Looking at our weekly chart, we see that over the past several months, buyers have shown strength. However, notice that it is hitting up. It did find resistance at that red 200 moving average on this weekly chart. So I want to keep an eye on that. But if it does come down, looks like the support would be right there about where it's at now or closing the week or somewhere in this $30 to $31 area. And if it continues bullish, then we'll be glad that we rolled this strike price up. And of course, if it comes down, we can always roll our strike prices back down. Now finally, it's about to close the NKE August 18th $100 put for 13 cents. We pretty much have pocketed almost all that premium, so we just went ahead and closed that out. We did a new bullish put credit spread in TROW. We sold the TROW September 15th 115 put and bought the $95 put. Got a pocketed $2.90 per share for this trade. So nice premium. Now, I had this order sitting out there earlier in the day, and if I had known the candle was going to look like this, I probably would have held off, but it is right at support. Notice that volume is declining as TROW has been declining. Volume yesterday was below the 50 moving average so far today, and now we're down about 40 minutes till the market closes. So far today, it is also below that 50 moving average. So it appears that TROW is arriving in an area where it should serve as support. Notice this is an area that served as resistance for it right here, going back to the middle of June, then going back here to the middle of April. So an area, and then also going back here to the beginning, early March. So an area that had served as resistance for it and now should serve as support. That coincides with both the moving averages. So a nice area that should serve as support. It looked like TROW was going to be bouncing off this early in the day as it did yesterday, but now it's pushed a little bit lower, but we're still right at that support. So I still feel good about this trade. I like that volume is declining. Over here on our weekly chart, we see over the past month and a half or so, buyers have shown great strength. It's just coming back down. It's retesting this area right here that I spoke about on the daily chart. So we like that position, and we'll see if it holds. If it doesn't, then we'll go into repair mode, and if it holds, and the return stays good, we'll maybe add a little bit to that position. Now finally 3M. We got out of a 3M position, I believe it was earlier this week. We closed it out because there wasn't much time, wasn't much profit left in it. We milked all the profit. So we sold one new contract of the 3M, September 15th, 105 put options. Let's pull our chart up here. So as expected, I think we bought that put option and closed it out. It was either Monday or Tuesday. I can't remember off the top of my head. But we expected it to come down, and it did indeed come down. It's now filled the gap. So it's now at an area that served as resistance, which should turn to support. It's also at this green 50 moving average, or in the vicinity of it. So volume is not exceptionally high as it's been coming down. So looks like a pretty good area to sell a cash care put option because of the support that it should receive when it hits this area, which is hitting now. So we'll see if it holds. Now a negative here is that we see that earlier in the week and last week, it did find resistance at the green 50 moving average. So do want to keep that in mind. However, over the past month, buyers have shown some strength. So just remember, 3M is still in a long-term downtrend on this weekly chart, not in the daily chart. In the daily chart, it made a higher high and a higher low. So in the daily chart, looking bullish. Hourly chart, looking bullish. But in the weekly chart, still long-term, a bearish trend. So we just want to keep an eye on that. All right, now final trade. Another one we just had sitting out that didn't expect it to get hit, but got hit and glad to get it. We sold the PEG, September 15th, $60 cash care put option, got $1.25 per share. All right, so hourly chart, not looking so hot. Daily chart. Notice here, and actually let's go here to our longer time frame. I like to show these longer trends on this longer time frame. So overall, we see that PEG, it is in an uptrend. It's made a higher low, another higher low. What's going to happen here? We don't know. It is high volume, and it does like it's going to close the week at the bottom of that candle. So that is not that bullish by any means. But we do see that overall it is in a longer uptrend. We see it's made higher highs. The past three waves have been higher highs. So the question really is here is it going to break through that 200 moving average on this weekly chart, through that upward sloping trend line that served as support for it? Will that happen? Well, we'll see. It had pushed through the green 50 and red 200 moving average on this daily chart. But as you see here, those moving averages did serve as support, but it tended to break through them. Here we see it broke through it here, pushed through it, broke through it again, pushed through it, broke through it again. So these moving averages, they tend to serve as support and resistance, but they don't tend to hold. It seems like this trend line here tends to hold. So now the question is, will it hold? Notice that our volume of the past week has been red. We had one nice green candle, the second highest volume of the past couple of weeks, but it's been fairly strong selling pressure. The question is, will it hold? So we're anticipating to hold. Of course, we could be totally wrong with that. So your options are to go ahead and do it, anticipate the hold, and if it breaks through it, then we'll have to try and repair it. Or if it does find support and begins to go up, your return might not be as good, but it would be a little bit safer trade. I mentioned that in a video I did a couple weeks ago. So that's our trade for this week. We're going to look to start closing out some of our third Friday of August positions next week more aggressively, especially if they don't have much time value left in them. And that's all for today and for this week. I hope you have an awesome weekend.